Good afternoon, everyone. I, CA Pragya Jain, on behalf of the Professional Skill Enrichment Committee of ICI, welcome all the participants in today's webcast on charting new ventures. How CS can apply entrepreneurial skill to transform business ideas into successful enterprises. I will first of all I welcome today's resource person CA Bhavesh Mahajanji and other present over here. And it's a great privilege me to introduce today's speaker CA Bhavesh Mahajanji. He is a distinguished chartered accountant and a senior partner at Massive Bhavesh Mahajan and Company, Amritsar. With over 19 years of professional experience in audit and assurance, taxation, banking, financial consultancy, and strategic advisory. He is known for his integrity and governance driven leadership. He has earned a strong reputation for delivering quality financial and strategic solutions. He is a passionate academic and mentor. He holds multiple ICI certification, including DISA, Forensic Accounting and Fraud Detection, GST, and Artificial Intelligence for Chartered Accountant 2024. And he serves as an empanelment faculty of ICI, actively contributed to professional training and ethics. He has held key leadership positions such as Secretary and Vice Chairman of ICI Amritsar branch and Secretary of Income Tax Practitioner Association Amritsar. He is deeply committed to social and educational cause. He co-founded YAKP Private Limited and a socio-economic startup promoting financial literacy. And he serves as founder board member of Teja Singh Samundri Viksit Amritsar Foundation and treasurer of Vidya for All. He blend of professional excellence, ethical values, and social responsibility makes him a respected voice in accounting and finance literacy. Once again, we all welcome you, Bhavesh ji. And without further ado, let's we start with the session. Over to you, sir.
Thank you, Pragya. Good afternoon, everyone. It's indeed a pleasure and honor for me to once again present before you my views on a topic for the day. Uh, this is one of the topics which is very close to my heart because, as in my intro, Pragya ma'am has told that I have been a founder uh, member of one of my own startups by AKP Private Limited, where we are promoting the entrepreneurship skills among the youth and making them and trying to make them skill and more of a entrepreneur thinking so that we can move towards the concept or a vision given by our honorable prime minister Mr. Modi of becoming a job provider rather than a job seeker. So when we talk about this topic of job provider rather than job seeker, the first thing that comes to our mind is entrepreneurship. One of the most buzzing word at present going on all over the society and the economy because entrepreneurship is something which is very much required in current scenario, in the current economic world, especially after the different geopolitical uh, aspects all over the world and sanctions by the economies like US on Indian economy with by putting up exorbitant rates on the export done by us. So it's the time now that each member of the society start thinking about becoming an entrepreneur rather than going for the job and spending a lot of time seeking the job because there is lot of uh, shortage in the world, in the society, Indian economy as well as the international economies also. Just to give a brief sight of the importance of entrepreneurship, If we go back to our ancestral or our history of India, Bharat, at that era, before British era, there was no concept of job. Actually, if we go through the Sanskrit, the original language of Bharat, there is no word like Naukri in the Sanskrit word because at that time there was nothing like a job or a Naukri. Everyone was self-sufficient, self-reliant, and working for its own and contributing to the economy. So each and every member of the society himself was an entrepreneur. Even our education system was such that entrepreneurship was promoted and everyone was made self-reliant and was promoted to become its own master. But with the coming of the British era and McLaw's education system, what has happened is students and the people of the society started becoming the white collar job uh, clerks or white collar employees of the government. It was the strategy of the British to basically make the citizen of India dependent on salaries and to kill their entrepreneurial skills. So now, after when we are moving towards 100 years of our independence, at that time, it's really required that we all talk about or we think about and move towards the entrepreneurship and develop certain skills in us where entrepreneurship can be made applicable in our day-to-day life. And as a chartered accountant, it's our foremost responsibility that we, the uh, partner in nation building, has to play a very active role when it comes to developing these type of socio-economic changes in the society. And we have to start it from first of all from our own way of practice, our own way of working, and then only we can go into the society and tell the people that "See, if we can do it, why can't you?" I am a very firm believer of one thing that a chartered accountant is not a course, it is not a profession, but it's a lifestyle. It basically tells us, teaches us how to lead our life in the most ethical and most prominent manner. So basically, when we started our CA course, at that time, from that time till date, we have been doing the things without any basic course, and we have been doing it in our own way. If you remember your articleship days, what used to happen was you used to plan your day schedule in a manner that you complete your articleship also, you do your preparation for the exam also, and ultimately appear for the exam in the and clear the exam also. So what does it taught us was how to plan, how to execute, and how to get the best of the result through the own planning. There was no system wherein after every 45 minutes or 1 hour some bell used to ring and we used to change our topics or subjects like in schools or colleges. So what it made us to learn was that how we can plan and execute that planning. And that is what basic part of the entrepreneurship is. So let me start with my presentation. So our topic for the discussion today is, or television is, how chartered accountants can apply entrepreneurship skills to transform business ideas into successful enterprise. As I already said, what we chartered accountants are doing day in, day out, we are dealing with different problems, different aspects, different issues of the client and over our officers also. So in nutshell, what we chartered accountants in practice is we are already an entrepreneur who deals with different issues day in, day out, and take the uh, get the opportunities from those issues, and ultimately succeed in the life by overcoming those problems or making opportunities from the obstacles. So, from compliance to creation, what we chartered accountants are doing is that we are the master of this thing. So when the client comes to us, it comes up with different issues of his own business, his own trade, or his own line of activity, and expect from us that we should provide a good solution to his problem so that his problem can be resolved and we become the partner in that success. But what is happening is, in present time, we are so much getting involved into the day-to-day compliances and nitty-gritties that we forget that instead of doing the test work or instead of doing the clerical aspect of the work, we should go into the problem solving part, means solution part. We should go for the thing that we should form the solution of the problem that our client is coming up, so that we can we the we can use that experience to solve the problem of other clients also in that manner, in a more economical and more successful manner. So the basic objective of this session shall be that we have to develop a entrepreneurship real mindset, understand how to shift from traditional compliance thinking to opportunity focused entrepreneurial mindset that drives innovation. Now is the time when the traditional compliance work or traditional way of doing the practice is getting out. With the coming of AI and all those things, already a lot of discussion has been made in the previous past 2 to 3 years with the developing of the AI in a such a fast manner that slowly and slowly the traditional compliances type of practice is going to fade out, although not fully going. But if we talk about the growth will only come when we fix focus towards the entrepreneurship in our own practice. Smart risk navigation, learn proven framework to evaluate, manage, and leverage risk intelligently using your financial expertise. That's what is our forte. That is what we are known for. Our financial expertise and analysis of the risk is what help us or has give us an edge over the others who have not learned about these things while doing their CA practice or an article. So as a chartered accountant, we are already a step ahead of all the other people who are still trying to become an entrepreneur, because we know how to analyze the risk, how to mitigate the risk, and how to get the maximum out of the limited resources. Strategic value creation. Discover how CAs create sustainable competitive advantage and build investor ready business. As a chartered accountant, we can develop a good sustainable competitive benefits to our clients and ultimately make their business investor ready, because in current scenario a lot of startups and lot of new ventures that are coming up require lot of funds in the initial stages till the time they become self-sustainable or reliable. That's why our role comes into picture. Because of our experience and because of our understanding of the economic or the other matters related to a business, we can at any point of time give a good hand holding to the budding startup. And in the end, but not the least, leadership was key. We have to develop essential leadership capabilities to scale ventures while maintaining control and value. A leader is not the one who leads, but the one who ultimately makes the further leading. It's our utmost responsibility that we should not restrict our knowledge and our experience to ourselves, but we need to delegate and share the responsibilities with others so that they can also develop and they can also make themselves in a better position like us as a chartered accountant are. So we will be discussing one by one all these objectives of today's topic so that we can basically understand how, as a chartered accountant, we can become an entrepreneur or help the entrepreneurial journey of our client. Why entrepreneurship matters for CS today? Our main focus shall be that if we chartered accountants are also to become an entrepreneur, which we already are, but how, why this entrepreneurship at all matters? Because sometimes we come with a question that, see, sir, we are already a professional. If we are we are given certain rights and authorities by the government. But as you can see, day in, day out, lot of changes are being happening in the government and our system of profession also. So it's a high time that we should understand the forthcoming upcoming challenges and get ready even before those challenges affect us at the wrong time. So the changing landscape says that the role of chartered accountant is evolving rapidly. Traditional boundaries between compliance, advisory, and strategic partners are blurred. Now, a person as a member, as a professional, we are not only considered as a compliance person or an advisory person, but we are also considered to be or expected to be the member or part of the growth story of our client. Today's business environment demands more than technical expertise. It requires entrepreneurship vision and the ability to create value beyond standard services. In a traditional practices, what we are doing is providing the standard services to the client and doing the compliance and without understanding what the real problem is of the client or there is a gap between the current situation of the client and the growth story. When we start understanding those issues and start working on those issues and providing the solution to those issues to the client, here's where we will value add to the client and that will not only help them, but in a retrospect, in a other manner, will also help our group because then we will not become the cost center for the client, but become the revenue and the strategic part of the client's journey. With explosion of startups, MSMEs, and digital-first businesses, CAs are uniquely positioned to serve as growth partners rather than just auditors or tax advisors. Very rightly, that the way the startups are coming up, the way MSME business are doing. Let me tell you one thing. With the introduction of Section 15 in the of the MSME Act and making it compulsory in the tax audit scenario a couple of years back, lot of the way of doing the business of the clients has changed a lot. Many of our colleagues and professional builders have also started doing MSME consultancy, recovery part, taking up that issues of recovery with the debtors and help the members help their clients in doing recovering funds and making their working capital more positive as compared to where they were very much struggling with the maintaining their working capital. Because with this introduction, with making it compulsory, lot of things has come to the knowledge of the uh, clients also, but they don't know where to use this knowledge or how to use this information for their own benefit. So with the strategical implementation of MSME provisions and other provisions help the members are helping the client to recover their blocked funds in a more profitable manner and with in a legal way. So ultimately, the nature of practice is changing from just the tax auditor or the tax advisor to the management advisor or management consultant. The opportunity lies in this changing landscape is startup ecosystem is growing 12 to 15% annually. You can check in this thing that the India is the one of the biggest generation of a biggest startup ecosystem. But at the same time, the startups that are coming up are also fading away because of the lack of support or lack of handholding and lack of things which we professionals can very well plug the gap into and provide the best of the information to our startup clients. The digital transformation creates new service needs automatically when there is a surge. The way that everything is getting digitized, everything is from marketing to finance and everything, even production is getting digitized. It's requires a lot of new services wherein we as a chartered accountant can come up with new ideas and can help them to and become the partner of the new new time economy. MSME is teaching sophisticated financial guidelines because what is happening is, see, there are many schemes of the government that are being done for the MSME clients. Even the banks and the financial institutions have so many information programs or the provisions for the MSME clients, but the MSME units are not able to get them because they don't know. Neither the bank people are also not very much comfortable or very much well equipped to provide the solution to the client. So, as a chartered accountant, as a consultant, we can bring out that gap between the receivers of the services of MSME and guiding them to get the best of the financial services through a proper and with, uh, proper framework by the financial institution. Regulatory complexity driving demand for expertise. Basically, the day in, day out regulations are getting tough. Regulatory authorities are getting tough, whether it is taxation or other compliances. But at the same time, there where it comes, our role as a regulatory compliance member part, our role is to make the business regulatory fully regularized and without any fault, so that any type of unforeseen losses due to penalty or risk can be reduced. Technology enabling scalable service delivery is basically we will be taking up this thing. There is the SaaS, SaaS. It talks about software as a service. So we chartered accountants can develop these things because of our IT knowledge also and because of our uh, convergence with the technology day in day out that can help us to develop a solution for the develop a technology for the client requirement where not only the client problem can be solved but our problem can also be solved. So the unique advantage of a CA as an entrepreneur is financial discipline but natural. We are known for our financial expertise, deep understanding of unit economics, cash flow, and financial planning, which is a critical advantage in building sustainable business from day one. When we, if you must have also seen when we talk about being starting any work or even our own offices, we always work on the minutes of the thing. We know where we can save and maximize our profit because money not spent is money earned. That is what the logic is. And while planning for the thing, we always go for the most efficient expenses or expenditure system and with maximum of the revenue from the least of the cost. At the same time, we are also the best risk analyst. We years of identifying financial risk and implementing controls translate into superior risk management capabilities, which is very much essential for navigating entrepreneurial uncertainty. Look, if since we can manage the risk whenever we do the audit or other things, what we think about is how the it should be presented so that the tax department or other, but for whatever purpose we are doing the audit, they cannot raise any finger on the work of the of us as well as we can give the benefit to the client also. So what we are doing is we are the risk mitigator. We are the best one to first of all recognize what the risk is and then how that risk can be reduced because of our varied experience of different things, of our different type of clients. So when any client come up with the issue with us, we can always help them by using our experience or some other client or some other field where we have been able to provide the solution to them. Regulatory clarity. Look, in India or for that matter anywhere, if our client wants to start any sort of work, we being the experts of the being the chartered accountants are much more versed with the regulatory requirements. Our client might not be knowing certain things or most of the things, But with our able guidance and our able knowledge of the regulation, we can help them to do the work in a more uh, legal and regulated manner rather than going for a trouble at each stage due to their non-knowledge of regulation. Last but not the least, we chartered accountants are the trustworthiest professionals. Look, many of us has put pamphlets or other things in our offices that you can sleep well because we are there or we are working for you. That is because the client trusts on us. Over the period of the time, over the period of time, we have developed this trust not only with our clients but with the banks and other stakeholders and investors. Whenever the bank also requires some information or some part wants some help in case of any of the clients, they approach us as chartered accountants rather than the client directly because they know that each chartered accountant can understand what the requirement is and why that requirement is. So we are the best pitch between the service, between the uh, business and the stakeholders of that business, where like investors and banks and other stakeholders. So we are one of the most trusted and credible gaps where both the parties rely on us. So coming to the first part of this objective, what is an entrepreneurial mindset? Because we many a times mix entrepreneurship with business, but it's not the only the business. Entrepreneurship is something more than that. An entrepreneurial mindset transforms how CA approach their work and identify opportunities. For any entrepreneur mindset, it is very much important that we should have the that IQ, that mindset to identify the opportunities in any sort of if any type of work that comes up, if we are able to identify even a smallest of the opportunity from that, that means our mind is working in the right side, right frame of entrepreneurship. It's fundamentally about perspective, seeing a problem as opportunity for innovation rather than obstacle to be managed. If the client comes to us with some sort of a problem and we think that the client is more problematic and is not very much helpful in our growth. So what is that is that is basically a traditional system of practice because what we are doing is we are treating or considering the client as a problem or a problem issue of the client as a problem. But if we start thinking from the point of view of an entrepreneur, we will see that there is the issue where we can help the client by providing the additional services to them in order to get out of that problem. So what is happening is we, we I have understood the opportunity from that problem where the client is facing. Client might not be able to get out of that problem of his own. That's why he has come to us. So if we can provide a solution to him, he can it can be a good entrepreneurial venture for us also because same type of problem can be faced by many other people also, many other clients also. So the core element for the entrepreneurial mindset is that problem seeking. We, if in order to develop entrepreneurial mindset, we have to actively look for inefficiencies and pain points in the market. Look, as a chartered accountant, we should not only be concerned with our own clients, but we have to see the economy as a whole, as a market as a whole. See, what are the issues that are going on in the market? What are the problems that are being faced by different members of the economy at different point of time? So, if we can identify those pain points and make them and start working on it, we can develop a very good sort of entrepreneurial venture. It is beyond compliance. Entrepreneurial mindset is beyond compliance because moving from reactive problem solving to proactive value creation. Look, compliance is something what we are at present in the traditional system of our work is doing is we are doing reactive problem solving. So certain things has happened. Now we are working for the solution for the thing. But when we talk about entrepreneurial system, it is identifying the problem first itself and work for the and uh, work on the solution for the same so that that problem does not cause harm to us, but we can overcome of that by using the right compliance work and by using it in a more efficient manner. Impact focus, prioritizing scalable solutions that create lasting change. Our objective should not be a short term, it should be a sustainable. Our objective should be to provide the solution that works on a long term basis, that sustains different roadblocks that come into between and gives the long term solution to problems that being raised before us. But keeping all the above things, the most important part is that everything that we do is has to be done with a calculated risk taking. We should not become adventurous in a manner that it backfires to us or cause bigger harm to us rather than giving benefit to us or the client. So calculated risk taking is something which entrepreneurial mind has to think about. They have to take risk, but naturally, without risk, there is no entrepreneurship. But that risk should be in a manner that it should provide the basis, it should give the uh, calculated one and mitigated one so that if any type of problems come in future, we are ready for that because we have made our preparation in a manner that it can it in the manner that the risk can easily be mitigated at later point of time, although risk can never be zero. So in a nutshell, we are going to see throughout what is a traditional CA and what is a entrepreneurial CA. We have to move from traditional CA to entrepreneurial. So traditional CA, in case of a risk orientation, they always avoid risk and mitigation focus. Risk avoidance and mitigation focus. They are more into how the risk can be avoided and it can be mitigated. But as an entrepreneurial CA, we do take risk, but that is a smart risk taking with proper safeguards. So we are ready to take risk. We are not afraid of the risk. We are ready to take the risk, but with a smart, proper safeguard. It is just like mitigation, but more, uh, more. It's more in a smarter way and in the manner that you can get best of the result from the even the risk taking also. When it comes to vision scope, traditional sales is more of a client specific, project based thinking. Whatever means if client has come to us, we will think only about that client. If a project has come to us for some type of this thing, we will work on the project only considering that single project. But when we talk about the entrepreneurial CA, a full of the market is our client. It is a market level, scalable solution design. We always find the solution of not only which is a project specific or a client specific, but we try to create a solution which is market specific or a market where every member in the market or every part of the market is our client. So we are targeting the whole of the market rather than a single client or a specific client. The primary approach of a traditional CA will always be compliance driven, accuracy focused. We work more on the compliance and accuracy rather than the growth. But when it comes to the entrepreneurial CA, he always thinks about value driven, impact oriented, how to create more value by automatically with compliance also, but how that compliance and other work can help us to create value for the client so that he doesn't think our services of compliance as a cost center, but all consider us as partner in their growth. Traditional CA works on an annual cycle, means there is an audit once in a year. If there is a GST compliance once in a quarter or anything like even this thing. But as an entrepreneurial CA, we are part of the client or our work is going 365 days a year and 24 by 7. We are all the time thinking of long-term value creation. It's not related just to a once in a year meeting with the client, but regularly interacting with the client, regularly considering their problems. seeing what they are doing, what better opportunities we can provide them, because we are doing our homework in a manner that anything that comes to our knowledge, which we think any of our clients can take benefit of. It's our duty, and as an entrepreneurial CA, we will always try to give that information to the client and help them to see if we can take the benefit of that opportunity, because we are not waiting for the client to come to us once in a year, but we are approaching the client. Sir, this is the thing we have come to know about the line of activity which you are dealing in, and we can work. If you are interested, we can work on it, and we can provide the best hand holding to you also in attaining this new opportunity. Traditional CA revenue model is time-based billing services fee. Means once the audit is completed, whether we are not regular earning, but what is happening is whenever there is a season or a compliance period, at that time our billing and our revenue is at the peak, and from that we think that we are going to sustain over the whole of the year and wait for the next such billing for time. But as an entrepreneur CA, it becomes a scalable product, recurring revenue. The revenues keep on generating day in, day out on a regular basis rather than on a specific time period basis, which help us to manage our finances, our cash flow in a much better manner. Is of a traditional CA is adding more clients and hours, because if we add more clients, it also leads to a more hours. But we all know that hours are limited. It's 24 hours a day and 365 days a year. So we have what we happens is we have to squeeze ourselves or squeeze the work of the with the adding of more clients. We have to compromise on some other client or compromise on our own self with sure, sure, thank you. So basically, we were talking about how a traditional CA and entrepreneurs CAs differentiate in their mindset and their approach. So both of them talk about the growth, but their strategy is different, or the we have to work more on the entrepreneurial mindset of the as a chartered accountant. The mindset shift is critical because it determines whether you build a practice or an enterprise. Till now, what was happening was the we as a chartered accountant used to build a practice, but it's now a high time with the changing demands of the market and the economy that we have to shift from a practice building to a entrepreneurship enterprise development system. Both are valuable, but only one scales beyond your personal time and effort. And it's only the enterprise's development that takes place, because sometimes the practice comes to a position that there is no scope of further development. Where do business ideas come from for CA? We as a chartered accountant are not allowed to do the business, but we have to understand one thing, the very basic difference, that our practice can be of two types. One is audit and assurance, the other is advisory. So when we talk about advisory services or the management consultancy services, there is a huge lot of opportunities that are available in the market, and there where our entrepreneur skills comes into action. The main ideas, we don't need to generate our own ideas, or we don't need to work on the generation of the idea. We daily basis are looking at the ideas from one way or the other. The best thing for us, the idea that can be created is client pain point. Recurring problems your client face become opportunities for scalable solutions. Your clients, whenever they come with any sort of a problem, and mind it, most of the clients have same type of problems because the it can be of anything related to the low working capital issue or data realization issues or GST issues or compliances issues or reconciliation issues. But those points which the client is facing is a opportunity or a business idea for us as a chartered process inefficiency, manual time-consuming tasks that could be automated or streamlined that can be in our own offices, that can be in the client system. So we can always go for the process re-engineering of the client and give them a better ideas or better way of doing the certain work, which will not only reduce their wastages or reduce their inefficiency, but will also help them to maximize the profit by reducing their cost into time-consuming activities. Industry exposure, deep or sectoral knowledge revealing unmet needs and market opportunities. Our industry exposure of different industries gives us a better opportunity where any industry is facing any problem, how we can solve that problem, how we can give the better idea to the problem. Because giving my just to give you a personal example of one way, we I had an opportunity to attend one of the association meeting, association of large industries, wherein all the industrialists or the members of that association were talking about the lack of available resources, skilled employees, skilled workforce, lack of better quality products for as a raw material and this thing. So automatically we come to know that even the largest of the industries are facing the same problems which the MSMEs are facing. So we thought about an idea wherein we gave them a solution that we can provide you a link point wherein the MSMEs who are already producing certain raw materials which can be beneficial to you, or with certain amendments in their production system, they can provide the same raw material to you in a very efficient cost manner. Because in that way we help them to provide the resources which they were looking for or were not aware of. But we told them that whatever your problems are or what type of raw material you require, you tell us. We will be finding the suppliers for the same and helping you to get the right price raw material with the same quality or rather a better quality in a nearby areas from you, which will also reduce your logistic cost. So that type of solutions we can always provide them because we are dealing not with not only the one aspect but different industries, different clients of different industries. As a regulatory gap, new compliance requirements creating demand for specialized expertise. So when GST was introduced way back in 2017, many of our professional brothers started working on the refund part, started working on the thing ki how the GST refund can be claimed and make them means they expertise themselves in the refund aspect of the GST. Now, refund is only one of the part of the GST. But rather than going for the regular compliance work of the GST or doing the return part of the GST, what they chose was the one of the specific services where which not only help the client to manage their blocked ITC or help them to improve their working capital system. It also helps them to scale themselves because now their eligible refunds were available to do them in a better time frame. So the best business ideas for CAs often come from daily practice. We don't need to spend a special time for that or this, but we have to keep our eyes, ears, minds open to identify what ideas can be generated from the problems that has come to us on a day-to-day or daily basis. We have to pay attention to patterns. When three clients ask about the same problem, their market signal worth exploring. Look, one problem, specific client may have a specific problem, but if a same problem is being faced by our different clients or different, that means there is some issue in the market or some opportunity in the market for which we need to work and find the solution for the same. So that itself is the business idea where we can work upon. So just for an example, what common ideas for CA can be virtual CFO services. Look, as a member in practice, we are not allowed to do the a full-time employment as a CFO or something. But a virtual CFO services is something which we can always provide to our not one client but more than one client. Part-time CFO services for startup MSME who need strategic financial leadership, but they can't afford full-time executives. So being a part-time, like we have heard about part-time accountancy. So what the account they do? They do the work or part-time basis, but for more than one client, thus increasing their opportunity as well as increasing their this, revenue. So same way, we can also provide the part-time virtual service CFO services and help them to manage their finances as well as finding more viable solutions for their financial requirements. We can form the compliance automation also like SaaS. SaaS, what is SaaS? It is software as a service. We can make a software of our own, or we can provide get the software developed for the client, which can do the basic clerical related work like GST reconciliation, TDS management, or regulatory reporting that reduce manual effort. That will not only help in better compliance networking, but will also help us in focusing more on the development part rather than a day-to-day clerical part. It will also help the client to get worry free that their work is getting taken care by the management, by the technology and the software, and they don't need to do the work or can deploy their HR in a much better manner so that they can get more output from their human resource. We can do startup advisory, end-to-end service for entrepreneurs, including entity structuring, fundraising, support, and financial research. As I already said that most of the startup get failed, even if having the best of the ideas, because their execution get failed because of lack of information regarding the fundraising or inability to raise the funds at the right time and the right system. So where our role come into existence? We are there to link them to a right investor and also to right investor to pitch them the right pitch so that the maximum benefit can be provided to both the parties. And there and being the trusted part between both the link between both the parties, we are there because we understand what the startup entity requires and what is the expectation of the investor from the startup entity. So in both ways, we can provide the startup advisory and earn a good income from that. Sector-specific consultancy can be done, like I said, if we can, on the basis of our experience and on the basis of our day-to-day practice system, we can always use the knowledge acquired through the system into a specific industry-specific consultancy. Like deep expertise in niches like healthcare, we can if we have a good clients of hospital or healthcare services, we can use the information received from them or gathered from them or our experience from them how they work on this in making a good uh, software of our own or a setup of our own or technology based in, initiative of our own where we can link different healthcare services to the provide the best of the to services to the patients and the public at large. Just like that, even real estate or e-commerce living specialization solutions can be provided by us because we are already working on the same, but not as a entrepreneurial mindset, but just as a uh, compliance system. So once we start thinking about like an entrepreneurial mindset, we will start generating opportunities from the same system of network we already have. From idea to impact, four-step framework. Basically, we started with the idea. Idea we have received, but that idea has to put an impact, ultimate impact on our own system, which requires a four-step framework, which starts with identify problem. Like I said, a client comes to us with a problem and tells that there is a big thing which requires a specific painful problem affecting a defined group of potential customers. So once we know that if certain of the clients are facing a similar type of problem, now our mind should start getting working on the thing. We should validate demand. Means whether if we work on the thing, can that demand be created? Test whether customers will actually pay for your solution before building it fully. Because in that way, what is happening is we have to see whether okay, there is a problem, we worked on a solution, but will that solution be a revenue generating? It should not be in a manner that we build up a solution, but ultimately customer refuse to or the client refuse to pay for that. So if we talk up forehand by the with the client or this thing, okay, we can provide you the solution, but it will cost you little more or little extra in addition to what we are already charging from you or something like that. So if the customer shows an eagerness, okay, he's more interested into problem solving rather than the thinking about the cost aspect. Because in a long run, that problem solving part will ultimately save in other costs also, leading to a better profitability. So once our demand is validated, we start designing the solution. We start creating a minimum viable product that solves the core problem effectively. We should work on a design in a manner that its core minimum product also means least cost solution should be such that the client should feel happy or should feel think that our problem is getting solved. And then only he will help in or get ready for a better or a higher version of the product. We have to measure the impact to track key metrics to understand what's working and iterate rapidly. We have to understand the solution that we are providing out in that solution, whether it is working in a same manner as we expected or the client expected or some other problem is coming or client is not giving. We have to continuously monitor and review our solution. Then only it can ultimately convert it into a viable product. Don't skip validation because validation is ultimately the point where most of the startups fail. Startups come with the ideas, they come with a solution to a problem, but without the market fit system. Market is not ready for that solution, or the market is not very friendly to that solution. So, in spite of our efforts, in spite of our solution, if the market is not ready to absorb it, then that is a waste of our resource and waste of our energy and will not serve any purpose. So spend time with potential customers before investing heavily in development. We have to talk to the customer again and again, and try to realize that the minute of the thing that a customer is expecting from a particular solution. So till the time we work on that minutest of the thing, we will not be able to provide yet the customer satisfaction or validation in a manner. So our prototype or any solution that we are providing should be in a manner that it takes care each and every aspect or every question of the customer or a client, and he is ready to invest in that. Just a small case example of CA turning pain into product. So one of the basic problem that used to come even after so many years of the GST implementation, that every client struggle with GST reconciliation, a manual error-prone process taking almost 3 to 4 days every month. But this problem is universal and with good solution is there. So that was the reason many of the softwares came into existence which are providing the GST reconciliation system. So those softwares, whosoever are in the market that's going on, online or offline, what they have done is they understood that this is a problem that is going to come, and they came up with the solution in the form of a technology. And what has happened is at present, there are many such software that are moving there, and each and every software is working because at present, considering the GST uh, volume, the market is endless. There is a lot of scope in the market where the indigenous software development or indigenous solution can provide in your local market or in your own area a very good business opportunity. So what happened is, where the example that we are talking about, they started with the five beta clients of own clients. Means they started with their own clients, uh, where they talked about, they tested this thing on them, and when they got the validation from them, then they went commercial and made 50 paid clients in 6 months through referral, and ultimately, slowly and slowly, they developed it to 800 plus business with recurring revenue. So, but just starting with just 12 people team, they are able to form a very big business idea by investing first in a small manner and then increasing slowly and slowly, thus without putting more pressure on the revenue or a cost. So started small, validated with real users because five beta clients, their own users, they found out what problems can be there or what future risk issues can crop up. They worked on it at a very first instance itself. So scaled based on feedback, whatever feedback they got, they worked on it, and again and slowly through referral they started working on this, and financial discipline from CA background kept burn rate low during early days. That's the reason why they kept their team small and slowly increased it with the limited resources they have. Financial intelligence as an entrepreneur edge is very much important because cash flow management is very important part. What happens is, most of the people fail to identify the difference between profit and cash there. I The enterprise may have a profit in millions, but when it comes to the liquidity, there it faces a lot of crunch. Reason being, they are earning the profit because of the cost factors, but their actual cash flow is not being managed in a right manner. CS instinctively manage working capital, time receivable, and maintain adequate buffer. The very much important is we understand what should be the ideal uh, receivables and idle payables so that our cash flow is not stuck at any point of time. What is happening is most of the units are failing because their receivables are at the time receivable turnout time is more than their payable time turnout time. Reason being, because of which they get caught into the working capital crunch and ultimately leading into a high cost finance availability. The moment they go into that, they get into the vicious circle of high cost of finance, which ultimately leads to their downfall. So, our skills comes into action at that point of time. We tell when it comes to our own system, we have to keep it as 13-week rolling cash forecast. We should know that how much cash required is for the 13 weeks, and at the same time how to manage that 13-week cash rolling. 13-week cash rolling means almost quarter of the year. So we have to work in a manner that if any problem arises, we should have enough cash in a manner that our 13, 3 months of our cost is taken care of. Payment term optimization, we have to work on the system that our payment terms are in such a manner that we get best out of it. Payment terms is not always the thing we get bigger of the credit time. Sometimes some of the businesses are such that our profitability comes into part where we make a timely or early payment to earn an additional discount from the supplier. So that ultimately leads to our profitability. So using the funds in a non-profitable manner or keeping the funds in a non-profitable thing, but to pay them to a client and customer in the more timely manner and demanding or negotiating a better rate and better discount from them will add to our profit in a indirect manner. We as a chartered accountant are the best unit economists. The ability to calculate customer acquisition cost, lifetime value, and contribution margin per unit separates sustainable business from cash burning venture. As a chartered accountant, we can always help our clients to understand these things. See, what is our customer acquisition cost? What is our lifetime value? Because customer or client does not always work on these things in that particular manner and goes on a more of a short term system. But if we plan and tell them, see, okay, this is the issue you have to work on. You have to lower down your customer acquisition cost so that your burn rate reduces. So in that case, we can help them to calculate CAC to LTV ratio, gross margin analysis, and cohort-based profitability so that they can understand where they need to spend more at initial stages and where they need to hold on till they get into a more of a self-reliant system. So that will help them in the initial phases and to manage their own sources and revenue in a much better manner. Break-even analysis, we have to work upon that if we start working on if we start any of the venture or the client start any of the venture, at what point of time we will be able to recover our fixed cost. Because then only the actual profitability will start. Knowing exactly when your venture becomes self-sustaining guides very major decisions. Whether we need to go for the further expansion, whether we need to go for the further investment, that will only be decided when we know that we have break even or not. So milestone-based planning will help us to make short targets, short milestones, wherein after reaching we can plan further by taking the experience of any issues that we have faced in our previous milestone. So what are the key takeaways from this is the idea already exists in your practice. We day in day out, ideas are always there, but it's we who have to keep our mind and thing open to see how that idea works or how to identify those ideas and how to make them into a business opportunity. Mindset determines skills. It's our mindset that talks about scale. Technical skill gets you started, but entrepreneurial mindset determines how far you go. I always believe and say one thing that as a chartered accountant, it's our mindset that help us to grow because we all have studied the same curriculum, we have studied the same AS, we have studied the same other laws, but it's and got passed as chartered accountant. But it's our mindset that how we use that knowledge and our expertise or learning that we have done from our articleship to excel in our profession. So the shift from compliance thinking to opportunity thinking is the foundation of building scalable enterprises. Let the earlier we do this, the more better we can take our growth to a higher point. Your CA background is an advantage automatically because by default we have excelled in certain things which a normal or a non-professional CA professional entrepreneur will not will require lot of time to get knowledge about that thing. But we already are versed with them. So nothing better than us who can in the economy who can work on the economic these entrepreneurial ventures. Next part is the understanding risk in entrepreneurship. Look, without risk, you can never grow. But at the same time, risk has to be understood and handled in a manner, in the most efficient manner. Those of us who deal in stock market or F&O, we have seen how the risk mitigation need to be done in there so that there is no undue or unforeseen losses that can hamper our investment or a growth system. Many a times clients come to us where in a 1 year they lost so much of amount in the financial market or in the other year they earned so much. But the only those clients who are intelligent enough or who knows where to make a stop loss or where to put the break, they are only the ones who get successful. Even if they have to bear loss in a short term, they used to get profit in a long term basis. So we have to understand the two very basic concept of this case, that risk cannot be avoided. It can never be zero. Never, never be zero. The best of the controls can never make them the risk zero because there is inherent risk in everything. It's a nature, law of nature that risk can never be zero irrespective of the fact whatever precautions or mitigations you have done. So entrepreneurship inherently involves venturing into uncertainty. Look, whenever we think about or doing even when we started our own practices, we never knew how much clients are going to come, how much footfall will be there, whether I will be able to pay my monthly expenses also or not. But that's the risk we took. Each one of us in practice took that risk at that point of time. Whether launching a new service line, developing a product, or entering a new market, some level of risk is unavoidable. It can never be zero risk game. The goal isn't to eliminate risk, it's to understand, quantify, and manage it effectively. That's what is taught in our auditing subject. That's what we as an auditor do. Our auditing standard talks about this only from the first to the last. How to understand the risk, how to quantify it, and how to manage it effectively. If we are able to do it in our audit work, why not to do it in our entrepreneurial venture? CAs are trained to identify and mitigate risk, as I said, because we are the master of auditing, which can go sometimes lead to excessive caution. The entrepreneur challenge is challenging the risk awareness into smart decision making rather than paralysis. We chartered accountants sometimes get very conservative because we take the risk in a more roadblock. But as an entrepreneur, we have to improve our this risk assessment part by keeping the basic concept of the risk assessment, but at the same time taking the steps in a smart way so that those risk assessment does not paralyze or become a roadblock for us, but help us to uh, do our work in a much easier manner. So primary risk categories are market risk. Will customer actually buy or your solution at scale? That is the very much that where the customer validation or demand validation come into effect. Financial risk, can you sustain operation until break even? Because if we do that is the biggest question, whether we will be able to reach the break even point also and get out of the fund. That is the biggest financial risk. Execution risk, can you deliver quality while growing? Because when you grow, you tend to make certain compromises on the quality or certain compromises on the costing part or revenue part because growth can come only when there is a scale. So scaling, at the time of scaling, we sometimes tend to compromise on certain things which can affect at a later stage. So execution risk is there, which is we need to take care of. Regulatory risk, are you compliant across jurisdictions? There are so many regulations. There may be situation that we took care of few of the regulations but forgot about certain others which may hit us badly at a later stage. So technology risk is there. Is your platform scalable and secure? Technology is changing day in, day out. But we are not, our technology support or our technology base is not in such a way that it is easily amendable or easily adaptable to the upcoming challenges or upcoming development. that will fade out and will cause a bigger loss to us. But developing a technology in a manner that even if there is a change in later stages, that can easily be made adaptable to the new changes. People risk, can you attract and retain client talent? Look, when we talked about the leadership, we said that leader is the one who not only leads but develops further leaders. So there is also a second part to that. That while developing the leaders, you put into that, you made effort, you put energy into that. But after development, that people or the talent moves out. So that is one of the biggest setback to us because you now was the time when you were to get the best out of them. But after becoming developed, they left you and you have to work on that right from the scratch, developing a new talent. But that is a people risk. There is a difference between risk and uncertainty. Risk can be measured, but uncertainty cannot be measured, but has to be. It requires certain judgment. So risk involves known unknown situation where you can identify possible outcome and assign probability. Means like discussed some of the risk in the previous slide, that every risk we can work on it. Okay, there may be this many of chances that the technology will change in a couple of years or 4 years or 5 years, or there can be a chances that the demand in the market their regulations can be made tougher in a particular of time. There's some type of bill that is pending in the parliament that may come up at a later stage can hamper our regulation aspect. So all this can be calculated. For example, you can estimate the likelihood of winning a client, calculate potential revenue ranges or model different market scenarios. So as a CA, what is to be use historical data, industry benchmark and statistical analysis to quantify risk. We have to get ourselves ready. We have to understand the industry. We have to make the client understand that the industry is moving at such pace and you are moving around. So how can we help you to grow? Build decision trees, turn Monte Carlo simulation and create sensitivity analysis. Customer conversion rate. How many times you meet a prospective client and how many times that client turns into your customer. That is to be seen. Because if you are not able to convert the customer, that means you are not able to analyze the risk in a better manner, or you are not able to assess the risk where the customer conversion is not taking place. Uncertainty, on the other hand, requires judgment. Uncertainty involves unknown. Means, please see, risk is known unknown, but uncertainty is unknown. Means something which you can never estimate or you can never think about. Right? No one has thought about that there will be a corona era. No one has thought about that there will be a flood at particular point of time. But there are certain things which are out of our control. So situation where you can't even identify all possible outcomes, let alone quantify them. This includes disruptive technology changes, regulatory shifts, or completely new market dynamics. Like with the coming of AI, many of the things got obsolete because they were not ready to, or they never expected that this is coming. It came in such a fast manner. As a CA, accept that not everything can be modeled, build flexibility into your strategy and maintain buffer and develop rapid response capabilities rather than trying to predict the unpredictable. We should not waste our time in understanding that what is unpredictable. We should rather get ready. Okay, if something like that comes into action or something like that come before us, we how we are going to respond to it, or how whether we are ready for the disaster management. That is where our thinking comes into. So we have to mitigate risk as well as uncertainty. So understanding this distinction helps us to apply right tools to each situation. You cannot use the uncertainty part to a risk mitigation, and same way vice versa. The this mitigation tools cannot be used to uh, take up the uncertainty situation. So analysis for the risk, adaptability for uncertainty is the concept or the funda that we all need to follow. Again, in the risk, there is a blind risk and a smart risk. Decision basis blind risk is pure gut feeling. Okay, my gut feeling says that this is going to happen, or the client is going to respond in such a manner. It's my gut feeling. It means there is no scientific or otherwise logic behind this thing, but pure uh, intuition, optimism, or incomplete. But when it is a smart risk, that is based on certain data analysis, validation, assumption, scenario planning. Means if I have made certain assumption, that needs to be basis for there need to be some basis for that assumption. There where we comes into smart risk. In a blind risk, all in commitment before validation is there. कि, okay, I am taking a risk, blind risk is there. Let me put in all my efforts. If it works, good. Not, then also, okay, I am taking a 100% risk. But in a smart risk, I don't put in all my eggs into a same basket, but do it in a phased manner. As and when the I start investing, I start getting the return, I start understanding what are the problems that are going to come, whether I need to change my investment scenario or my other capital deployment, how to use it in a better manner or any alternative manner. So that will help me to say, save on the all in one losses and get out at a particular point of in a better manner. That we call it stop loss. So downside planning, focus only on upside. Blind risk is we always think about okay, if we are moving ahead, how we are without thinking if at any point of time we have to take a step back. What should be our motive in that, or what should be our agenda in that? But in a smart risk, there has to be always clear exit criteria and contingency plans. At what point of time we are going to make an exit. Because till the time we know what is our exit criteria, we will not be able to reduce our losses. Look, it's not necessary that all the ventures or all the things that we do are going to generate or are going to be profitable only. There may be 10 ventures where we enter into or get into, and out of those, only five may be where you go ahead, and five maybe you have to stop in between. So you should know where to stop and exit. Testing approach in a blind risk is built fully before market testing because I have played a blind. I have not assessed it. I have seen, okay, let's move into the market without seeing whether market is ready for us or not, and see what happens at later stage. But in a smart risk, my should be market fit approach where I am moving into how the market reacts to my product or my services. Whether they are ready to what this is, or I need to improve on my service, or I need to wait till the time market is ready to adopt my services or in a much better manner. In a blind race, there is always a reactive problem solving, reason being because we have not done a proactive work. We have done it in a blind manner. So it will always be whenever there is a situation, we will react to that. But in a smart race, it is always a early warning system, EWS, wherein we know okay, some problem is approaching or may approach at a later stage, and we immediately start taking care of or start working on how to mitigate that problem. So that will be more of a monitoring aspect wherein we are working on monitoring our uh, journey and seeing whether any issues are appearing or not. So our training naturally pushes us towards smart taking, risk taking. The articleship that we have done or something like when we used to prepare for the CA final also and other exams also, what we used to do was smart risk taking. Okay, which part we need to stress more upon, which part we need to stress less upon, because we have seen it as our working historical working that which is more uh, which topic is more likely to come into the exam and which topic is less likely to run. So that is the smart risk taking aspect that we used to do at that time. The same thing slowly and slowly gets into our own approach also, and we start apply the same rigor you use in order to use your entrepreneurial decision. Evidence based, that means with the historical data, well documented. We need to keep our plan in a proper strategy manner and with clear acceptance criteria that if at any point of time we need to change our approach or we need to take any unwanted steps, we should be ready for that beforehand. There are certain financial tools for risk navigation where they can help us by going through the entrepreneurial journey. One is sensitivity analysis. We all have seen that in our statistics sector that identifies which variable has the biggest impact of our income. We need to understand that which part of our entrepreneurial venture can bring whole of the venture to a standstill if disturbed a little bit also. So that is the most sensitive part and that's where we have to work upon or take care of the most. So test how changes in pricing, conversion rate or cost affect profitability. This reveals where the focus your risk management effort and where you have flexibility. This will help you to concentrate on a more sensitive part of the venture rather than working on a non-sensitive part. Because what happens is we miss out on certain important parts without analyzing whether a particular thing is going to affect in a more uh, vast manner rather than the other part. So scenario planning, develop three scenarios, base case, optimist and pessimist. Always you should have the three parts. See, okay, this is the ideal one, this is the optimistic one, and this is the pessimistic one. And make the good blend of all those with the specific assumptions for each. Your cash flow should be or your system should be in such a way not that neither it should be too optimistic nor too pessimistic and neither it should be the ideal because ideal one will never be there. But with the correct blend of all these things will help you to make move in a more uh, smart manner, more risk mitigated manner rather and avoid any sort of uncertainty. Cash buffer should always be there when it comes to the financial tool because at least half a year cash buffer should be there. We don't know, like at the time of Corona, if we were not ready for it, like the whole of the nation or whole of the system went into the standstill for almost 6 to 7 months, and in many of the parts up to 9 months. So what happened is we have to take it in a uh, that way that our cash buffers are such that it never stop us from going to our entrepreneurial journey due to any unforeseen event. One of the practical tips you can see over here is that we need to create a simple dashboard tracking your top five risk indicators weekly. We need to keep the risk indicators on a regular basis and see whether which part is hurting us more. In that way, we will be able to analyze in a much better manner. We have to structure our business in a such a way that it reduces the risk. Structures can be of different types, like asset light model. In most of the startups, especially when it comes to the service startup, we need to work in a manner that we invest less on the fixed part or asset part, and first of all try to get more less capital incentive and minimize capital requirement by leveraging others' infrastructure. We need to see that how we can work in a co-working space, equipment leasing instead of buying and partner with existing platforms. What in that way, what will happen is at the initial stage, our energy and the cost or finances or the resources will not get stuck into the asset part. And slowly, we will be able, once we become the sustainable, once we become a break even, we will be able to use our, at that time, we can use our own system. So, like Suppose you are starting a new venture, so instead of going into a full-fledged rental agreement or a full-fledged leasing, try to use it through a uh, co-working spaces because cost like rental, leasing, etc. put a very big pressure on your working cash flows and your working, and it ultimately leads to the stopping of the business and a huge burn in your pocket. So we have to keep a asset light model where the initial part we are not going to invest too much into the assets, but use the shared resources. At the same time, we have to go for the outsourcing strategy. Look, we can't do everything. We can only work on a planning and listing, but we have to find out the right outsourcing partner where we can see that okay, if particular work is already being done or at a lower cost, rather than hiring for that a full-fledged employee or a full-fledged, because we know that at present we will not be able to recover his cost fully. At that time, it's better to go for the outsourcing. You take a work out, some part of it outsources to others because you are not able to bear the cost of the full-fledged uh, resource person for that. So use freelancers for design, legal or development initially. That will help you to get the work done in a lesser cost as because in this way you will be able to utilize more of the resources without any fixed commitment with them. So convert variable cost to fixed only when the volume justifies it. So if you think, okay, I am at present in requirement of our own full-fledged employee doing this designing work or this thing, because I have already got X number of clients through which I can easily sustain this employee cost or designing cost. At that time, you can go for the uh, fixed part. But till then, go into a outsourcing strategy. This maintains quality while reducing your burn rate during early growth phases because the most tested time is the early growth phases because at that time there are many costs, there are many things that can bring your business to a standstill if not managed in a nice manner or in a strategic manner. Phased scaling. Grow is deliberate stages tied to validation milestones. Every milestone, we need to put a milestone, validation milestone in our whole of the journey. The scaling has to be in a phased manner. Don't hire ahead of revenue. As I discussed already, you're hiring without getting actual revenue. In anticipation of the revenue, don't put lot of cost. Launch in one city before going national. Means don't go for in the like we said, there has to be optimistic approach or a pessimistic. In being a most optimistic approach or a blind risk, what we thought about is okay, launch it on a national level, but we know that it will cost us a lot. So first, establish in one city, slowly approach to the another city, to one state, and then to the nation. But we have seen many ventures which took many years to go national, and first of all establish themselves on a regional basis also only, and once they are developed at the regional level, then only they stepped out for a because they understood that there is a regional disparities when it comes to the services. So test one service line thoroughly before adding others. Each phase reduces risk by building on proven success rather than projected success. Regulatory risk as opportunities, these things that we always consider that regulatory regulations is a roadblock. But no, the regulatory risk is an opportunity. Compliance builds trust. Whenever you are working for someone or for your client or this, always see one thing, you must have experienced that when it comes to the compliance or building trust. So if your client is very much compliant, means they are being time, all the GST is being done on a timely basis, PDS requirement has been done on a timely basis, employees funds, ESI, EPF has been done on a timely basis. The banks and the investors will also feel more secured and more interested in investing in you and your ideas because they know that since you are compliant, uh, well compliant. you will not face any sort of hurdle when it comes to the government. So CAs have a natural advantage in building properly from day one, because when we start from the day one, we always take, first of all, we take care of compliance part, timely taking of GST registration, timely putting up of the other compliances, SEMA regulations, etc. That help us to take regulate our any unforeseen risk, where due to non-compliance of any part, we can face some hefty penalty. Why this matters? Client confidence. Customer trust you with sensitive financial data because of your professional standards. So compliance. When we talk about regulatory and compliance, we also talk about our own professional ethics, which are regulatory in nature, because they know that our professional ethics are in such a way that client has a belief and a confidence in us that we will do our work in the most ethical manner. The compliance will also make us a investment readiness. Whenever the investor asks for something, if we are already doing it in a compliant manner, we can always provide in a timely and nice manner that the investor feels okay, they are whatever they are asking for, if we are providing in a timely manner to them and with clean compliance record, their confidence on us as well as on our working will increase. Scaling safety, proper structures allow graphic expansion without regulatory nightmare. Means if we keep on at the time of scaling, if we know that a particular deadline is there, not waiting till the end of the deadline, but planning and working for a timely completion of that deadline will help us to avoid any unforeseen situation. Market access, certifications and registrations open door to enterprise clients. To like what happens is many a time banks ask for outside rating for when it comes to the finances. So there are two things. One is since it's a requirement of the bank, you are taking the outside rating. But one is I on a voluntary basis take an outside rating and get my workings certified as certain category, or which will give an additional edge and confidence in the minds of the investor and the financiers that okay, they are already well compliant and well rated, and they have not waited for us to take the rating, but then it in a, because they understand and they value the purpose of this rating, that's why they have done it on a voluntary basis. So that will increase the confidence of them in us and our idea. So your compliance knowledge isn't a constraint, it's more that protects your business as you scale. So our compliance knowledge is not only will never be a roadblock, because if we are using it as a moat or as our strength, we are definitely going to make it as a edge or an asset in intangible asset for our business. One of the case example of such that risk optimized startup, like I said, there are virtual CFOs. So in that case, what happened is the virtual CFO practice built on smart risk principles, strategic choices. They started with a low cost, taking three clients at 25,000 per month each. Ultimately, slowly and slowly, without investing much into the fixed asset or offices or other things, they started from their home office and etc. And once they got enough clients and enough revenue generation, they shifted to a better or a asset investment model. So low fixed cost means he was profitable from month one. This allowed patient growth without pressure to make desperate decisions or raise expensive capital. Because once you go for a in high asset investment, you get into a you might there are maximum of the chances you get into a vicious circle of expensive capital cost. So what are the key takeaways is risk is manageable, not avoidable. Definitely, you can never avoid the risk, but you can manage the risk. You need to determine your structure determines risk profile. Your business model choices should be like asset like fixed versus variable cost and organic versus inorganic growth. Your approach should be such that you structure your any sort of risk in a manner that if at any point of time you have to you face any issue or any roadblock, you are able to get out of because you are not heavily invested into the asset. Compliance is competitive edge automatically. You don't consider compliance as a roadblock, but that is a competitive edge for you. So what is strategic value? Beyond profit, strategic value represents the sustainable competitive advantage that makes your business defensible and valuable over the long term. Look, entrepreneur never thinks about short-term benefits. They always think about long-term development and long-term uh, growth. In short term, they may not get that much of success, but develop slowly and slowly. We will like in a mutual fund when we talk about see, investing in a SIP and without sweeping about up and down of the market on a daily basis or this thing, and properly managing the SIP in a shifting from one fund to another will ultimately lead to a overtime growth which is unmatchable to any sort of other investment. So this is where your point should be beyond profit, but a growth. Your approach should be not be a profit oriented, but a growth oriented. And once you shift from a profit oriented to the growth oriented, your journey will lead to a better result. So components of a strategic value is customer relationship, stickiness, keeping cost, network effect. Automatically, your customers are your biggest asset. The more customers you have or customer relationship, the better customer relationship you have with your customers, you will not face the problem in your low days. Intellectual property possesses methodologies, property tools, whatever you work on, you should document it, get it registered in your name so that at any point of time your hard work, your this thing don't get waste. Build your brand equity, recognition, trust, premium pricing power. Once your brand is built, try to earn from that brand. Try to raise your premium services. Once a brand is built, then only you will be able to get the benefit from that brand because your hard work, etc., whatever you have put it over the period of time, that has led to your brand building. Operational excellence, efficiency, quality, scalability. If you are not able to provide the operational excellence or to get the operational excellence, no planning, no working will be able to give you a sustainable growth. You have to continuously work on the operational excellence because the as you grow, the more it will be more on a upper line because you will keep on once you are break even, your finance fixed cost has been recovered. It's only the profit that is going to increase after that. Your market position is category leadership, first mover advantage. Whenever you seek any opportunity, become the first mover because the first mover always has the advantage. The left are only the followers. So don't say or wait if someone else will do it, then you will do it. Because if you take the first opportunity, you will become the market leader. So CAs are uniquely positioned to create strategic value because we understand the financial implications of every operational. So these are the few levers for CAs which help us to create value for the client as well as for us. First is strategic pricing, value-based pricing instead of hourly billing tiered package that capture willingness to pay. So if we want to create value for us to the client, so one of the leverages we can use is strategic pricing. We have to make our price as per the value and not just on the basis of our value spend. So once we give the value to the client and make them understand, okay, we have added this much of value to your this thing, they will not consider us as a cost center but as a profit center. Cost optimization, process automation, vendor negotiation, strategic outsourcing to improve margins are some of the things that help CAs to do it because when as a chartered accountant, the more AI based services or technology based services we are going to use, or we are using in comparison to our clients, that only help us to make our low resources uh, bringing more of the revenue for us. Tax efficiency, structured optimization, credit utilization, compliant tax planning strategies are the things, because if we can plan or work in such a manner that our tax cost is reduced to the basis, we are not paying any sort of undue interest on late filings or late interest, tax deposits, etc. They all are savings. And we structure our things in such a manner that even after paying the taxes, we are able to get the best out of this thing. So that is what is required as a chartered accountant, and we as a chartered accountant can only do these things. Capital structure is the optimal debt equity mix. We understand the financials, we understand the uh, management accounting, we understand how the best, where we need to take a debt, at what rate of interest the debt can be better, and where we need to raise an equity. So by working on a good blend of equity debt mix, we can always give the best capital structure for the entity we are working for the startup we are working for, where they have to put the stock, where how much liquidation they need to do at the initial stage. These all things can be worked with by us and help the startup to get the most of the value for their business. These levers work together cyclically. Improvements in one area create opportunities in another. It's not that just one part is, every part is not independent, but they are uh, work in tandem. If if any one thing create an opportunity, the other one will give the solutions, and this way if we work all of them for all, we work in a tandem, that will definitely give the best result for us. Peers as strategic partners can be trusted advisor, co-founder, and board member. So you have to see what type of input you are ready to provide in, what type of input your client or thing requires from you. So if they only want you as a trusted advisor, you can be external counsel, helping founders make better financial and strategic decisions without day-to-day involvement. That will keep you uh, open for other ventures also without putting it on, but at the same time giving your best of the advice as a for any sort of issues that the founder uh, face. We can be a co-founder either in the form of equity or in the form of any domain skills or something like that. In that way also, what will happen is, okay, we are the finance expert, we are the this thing. So instead of hiring, we are not bringing in the capital, but what we are doing is we are giving you our IP, we are giving you our services, against which we are going to hold a equity. That can be a part in the form of a co-founder. There can be a board member for the purpose of governance and also to provide the strategic guidance for the investors, for bankers, for financiers. Because if you are part of the board, definitely the board, the investor and not only you will keep a regulatory part of the entity, but at the same time it will also put a face among the investors and the financiers that since you are a part of the board, everything will be streamlined. So each role offers different level of involvement, risk, and reward. It is upon you in what way you want to do it. So choose based on your capacity, risk appetite, and specific opportunities. Many successful CA entrepreneurs play multiple roles across different ventures. At one time, they are co-founders. At other time, they are advisors. The third time, they are means at the same time they are doing different type of entrepreneurship, but in a different role. Improving business performance is a CA impact. So what are the basic criteria of business importance? EBITDA improvement and cash cycle optimization. CAs identify hidden profit levers that founder openly. Look, one who is working or who is a founder, he sometimes gets misses out on certain low point or hidden points which can add to their profitability in a X factor in multiple times. But he is not able to recognize or find out that. But as a chartered accountant, when we go through the since we are involved into a unit marketing, unit pricing and process reengineering, etc., we can definitely identify what can be the additional aspects of low cost and higher revenue. So revenue leakage from poor pricing or unbilled revenue is one part. Supplier consolidations, reducing procurement cost, definitely, because with the proper supplier negotiations and good payment structure, we can always ask for the best of the discounts, which can reduce our cost by certain percentages. Inventory optimization, feeling working capital by not holding much into the inventory and doing it in a best manner. See how our inventory cycle works. If we work on that in an efficient manner, it will definitely reduce our working capital blocking. Departmental P&L accountability, improving margins, understanding different departments, how the each department is performing, what are the things that need, which department is adding to our revenue, which department is increasing our cost, whether that cost can be reduced or whether there can be any synchronization between the departments, which will help us to reduce overall cost. Product mix analysis, focusing on high margin offerings. We have to uh, make a good mixture or blend of our products so that different type of marketing, different type of the high margin products are more into potentially with along with low margin products. But at the same time, we have to maintain that the low margin products are not washed out but are kept in the market. But more of our high margin products are being sold or circulated so that our profit margin is maintained. So this can only be done if by the chartered accountant because we understand in and out of the financing. Typical impact is well-executed operational involvement can boost EBITDA margin by 3 to 7% points within 12 months, translating directly to higher valuation. Look, talking about a system, 3 to 7% might say, but when we talk about hundred of crores of turnover, 3 to 7% adds a lot. It's always this much of margin in this competitive scenario or in competitive market. Even smallest of the savings and smallest of the cost, better profitability can increase your value a many a time. Along with EBITDA improvement, we can work. We work on cash cycle optimization, accelerating cash conversion creates funding without dilution. Since if we are cash crunch, automatically the financer or the funding investors will negotiate in a different manner. But if we are not a cash crunch entity, automatically the investor knows that they will also get benefited from them or their investment will not get blocked into unreasonable, non-revenue things. So by reducing day sale outstanding through better collection, by making a better collection system, right blend of advance plus credit period that will work in the such manner and offering good incentives and offering good this thing to get a timely payment will automatically help us to create our cash cycle in a better manner. Negotiated extended payment terms with suppliers. With some suppliers where we can negotiate, okay, some additional terms we can get if we think that our receivables are not circulating in a expected manner, we can negotiate with our time period. But that can only happen only if at earlier stages or at before time we have never defaulted in the payment and never created issue for them because then only at any issue time or at a problem time they will rely on us okay since they have never defaulted earlier so there is no harm in providing them an additional payment term or extended payment terms in a point of need. Optimizing inventory turns and reducing obsolescence. We don't need to our inventory should be such that it's continuously moving, no slow moving items, no obsolete item because they are the things that cause a lot of uh, cost including the storage, maintenance, and reduction in the value over the period of time, which we need to reduce at the move. Structuring milestone-based customer payments because we have to make the payment system our cash flow in such a manner that no payments are done on a single day, but they are paid in such a manner that our cash flow are not, whatever we are getting by maintaining a good buffer, we are also spending further. So in this way, once we reduce the client cash conversion cycle from 65 days to 42 days, which help them to generate almost 21 lakh, 2.1 million in working capital, which is equivalent to months of profitable growth without external funding. Otherwise, they should have to go for the external funding for 21 lakh, which will cost them additional cost of interest, additional cost of other compliances. But by just managing their recovery cycle from 65 to 42 days, they were able to generate this fund from the inflow itself. So that where the our working come into this thing. We have to build investor friendly in building investor ready businesses where we have to work on at this thing. So versus investor ready business is robust MIS and governance by keeping the best of the system in this and the practices. Play, our MIS should be that way that if any investor require any information, it is available on the click of button with us, and the investor knows that our systems are well placed. Valuation readiness, clean cap table, documented IP ownership, etc. That will help us to make our valuation more uh, specified and more attractive, which will help the investor also that whenever if they are investing in our business, they are going to get in a better returns in a long run. That can only be done by having all our systems in a good manner. Credible financial projections, no over ambitious financial projections, but a good phase-wise, phase manner development financial projections with proper assumptions without any undue assumptions that only gives the confidence among the investor and the financiers. Because when your projections are credible, which can be tested and checked by the financial investor from any sources, that will boost more confidence of them in you because that will help them to get help them to plan in a much better manner for you. One of the case example is MSME transformation. Annual revenue before CA intervention was 12 crore, but with the CA intervention, the revenue increased to 18.5 crores because of the better sales, better customer acquisition, better planning. EBITDA also improves because with MSME working, you are able to acquire better in low cost interest, low cost finances, and also to circulate the cash flow in a much better manner. Ultimately, with CA intervention, whole of the key points in the finances increased many a time, which ultimately led to a good development of a MSME. So implemented ERP system for visibility, renegotiation, supplier system, introduced product line profitability analysis, etc. All help the MSME customer to grow without any additional or high cost which could have happened if they have to hire us. Because you as a chartered accountant have provided to a sustainable solution which not only added to the revenue but also helped you to growth because your efforts and this thing talked about. So strategic converts efforts into value. Financial discipline enables premium valuation and multiple paths to impact. That is what is key takeaway from all this discussion is because working harder doesn't create strategic value but working smarter does. So what we have to do is we have to make a strategic value for the client. We should become more smart in our working to give best of the services to the client in a much timely manner. We should also enable the financial discipline among the clients and help them to understand why this financial discipline is required for the overall growth. And with as a CA training also, we are able to do the same thing in our own practices, because we know that how the sharing of the resources and other cost saving things can help us to maintain our finances in a much better manner. There are not a one way but a different path to impact. Our role decides what way we are going to impact the entity's success or a growth. And our accordingly, the same way like founder, like an advisor, or like a board, in any way, whatever they work in whatever capacity, that is definitely going to increase our this thing. So founder versus leader mindset, as we have discussed already, that we have to, there is a founder phase where we are working, everything we are working on is our own. And then there is a leader phase where we start delegating, we start developing the sub leaders, and that is where we have to work upon. The first is founder phase, all by own self. Then is the leader phase. Okay, we have reached the position. Now it's the time that we start delegating the work and work on a further plan. Essential leadership skills should be decisive decision making, clear communication, and ethical foundation. Decisive decision making is how to leaders make decisions with incomplete information under time pressure. So we have to manage it in a such a manner that if we plan it in a
एक्सक्यूज मी, ये उनका नेटवर्क का कुछ इशू हुआ है क्या सर का?
okay, Pragya ma'am, I think I am done with this thing because I was almost on the last slide when the connection got disrupted. So we can sum
Yes,
up
sir.
the.
Yes, sir. Yeah, definitely, sir. Thank you. Thank you so much, sir. And it's again privilege me to give vote of thanks to Bhavesh, sir. And it has been such an honor to be part of this wonderful webcast on charting new ventures, how CAs can apply entrepreneurial skills to transform business ideas into successful enterprises, organized by Professional Skill Enrichment Committee of ICI. And on behalf of the Professional Skill Enrichment Committee ICAI, we would like to extend our heartfelt gratitude to our speaker, CA Bhavesh Mahajan, sir, for his enlightening session, and sincere thanks who enabled to webcast throughout. A wide round of applause and thanks to the organizer Professional Skill Enrichment Committee of ICI, our today's speaker CA Bhavesh Mahajan sir, and other stakeholders made the webcast a memorable one. Finally, we would like to thank you all of you present here and helping us make this webcast a grand success. Thank you one and all. Thank you, sir.
Thank you. Thank you.